And welcome back to Market Day Report as we work through this Monday here before Christmas. Mark Oppold, joined by a good friend, Dewey Strickler. Again, if you're a new listener, new viewer to our Market Day Report, make a note every Monday we have Dewey with us at this time from AgWatch Market Advisors out of Franklin, Kentucky. Dewey, hope you're all ready for Christmas.
Yeah, I am, Mark.
Very good. And talk about, is the grain trade ready for what's coming here? Not sure what that is, but a grain trade that been showing a little strength here going into the break.
Yeah, that's right, Mark. This week and next week, I would pretty well take what happens in the grain trade here, mostly with a grain of salt, because you've got very little liquidity. Last week, you started seeing some of these funds in corn and wheat start winding up some of their business there. We had both of those, the funds liquidated some short positions in corn and wheat. So, I take everything with a grain of salt with what happens here. We're waiting to get back to the first of the year, which business will be back to usual.
All right. Well, you and I know back in the day, when we had the floor trading, you could easily talk about, there were fewer people around, so volume was going to be down. Well, now when you can trade with a computer, a laptop, what about volume? How does that change, if it does, during the holidays from what we used to see?
Well, I don't think there's really that much of a change here. You got to remember, these professional traders, they're not going to have as many fingers on the keyboard as they go through the holidays here, because these guys are winding down the positions. If they're showing good money made, say for the month or for the year, they want to take that money so they can close out and you might say pad up their bonuses a little bit here for year end.
Very good. So looking at the corn trade here, I've been in a fairly narrow range, predictable range. You look for that to continue, it looks like.
I think so. You might get a shot here at the March corn getting above 382 a little bit here, maybe 387 over the next, say through next week. I won't say it's going to happen, but I won't rule it out here either. Long term, still look for the market to work lower.
Looks like 370 is still a technical number to hold on the downside, though. Is that correct?
Yeah, that's right. And actually, you can go all the way back down to the low that we made here last week, which is just about, 362 there.
Mm-hmm.
I mean, we had a spike low. I mean, we could go back down and test that without any problem.
All right, 2 cents lower to start corn here. We are open in trading and the soybean trade as well, looking at South American weather, but still there. Beans down a couple of cents here to start the day, Dewey.
Yeah, that's right. Really, when you look at the beans here, Mark, we have not been in anything other than just a trade range since the month of August. We've got some highs here on the March contract of beans at 926. Also, earlier this month, 911.5. I don't see anything to push us out of that range here for at least until after we get back first of the year.
All right, unchanged in the soybean trade. Wheat trade, real quick, looking at those numbers, down a penny as well. Chicago, Kansas City March contract down as well. Kansas City down about a penny to start the day. Actually about 2 lower now. And Minneapolis trade there early on here. First look unchanged to down 1/4 cent. Dewey Strickler, AgWatch Market Advisor, is with us. We'll take a break, come back and check the livestock trade. Yet not open, but looks like it's going to be a stronger start. We'll get his thoughts coming up.